Hi, welcome to Topics in Macroeconomics. This topic is interest rates and conventional monetary policy. Central banks typically implement monetary policy by using a short-term interest rate. For example, the Reserve Bank of Australia uses the overnight interbank rate, or what is commonly called the cash rate, as its monetary policy instrument. In effect, the RBA implements monetary policy by announcing a target value for the overnight cash rate. The cash rate is determined in the interbank loan market. The participants in this market are banks and large financial institutions. A feature of these loans are that they are short-term, less than 24 hours in maturity. Banks and financial institutions use the overnight market in their liquidity management. For example, a bank may have a surplus of funds from their transactions and will seek to lend those funds to other participants in the market. Alternatively, a bank which had a deficit of funds would seek to borrow funds from other participants in the market. Central banks set a target value for the interest rate in the overnight market. The RBA's current target, as of March 2014, for the overnight cash rate is 2.5% per annum. Given the current state of the economy, this target is generally viewed as an expansionary stance for monetary policy. In order to achieve their target value for the interbank rate, central banks need to intervene in the overnight market to ensure that the actual interbank rate is equal to their target value. A common strategy, and one that is currently used by the RBA, is to employ a channel or corridor system. Under its interest rate channel, the RBA announces a target value for the cash rate, let's say 2.5%. In addition, it sets two other interest rates which are directly linked to the cash rate target. One rate, sometimes called a discount rate, is set 0.25% above the cash rate target, and a second rate, called the interest rate on reserves, or IROR, is set 0.25% below the target rate. Under the interest rate channel, the target cash rate is bounded above by the discount rate and below by the interest rate on reserves. The figures for March 2004 for the RBA are as follows. The target cash rate is 2.5%, while the discount rate is 2.75% and the interest rate on reserves is 2.25%. In effect, the channel ensures that the actual cash rate can never be more than 0.25% above or below the target cash rate. In a subsequent video, we will examine how a channel system bounds movements in the actual cash rate and how central banks use open market operations to ensure the actual cash rate is almost always equal to the target value. See you next time.